Everyone, Paul here. Today I'm going to be giving you guys a strategy, and it's pretty powerful. We're going to be doing this for the stock market today. Now, this strategy, you only need two indicators. I've talked about them a lot on this channel, but there's one indicator that I've talked about a lot, and then there's another one where you kind of have to customize it a bit, but it really it will work in your favor, and it works especially good on the longer time frames. But for this strategy to work, and we're going to be looking at the stock market today, we're going to be focusing on longer time frames, and we're going to be doing the linear line strategy, which is a good strategy by itself. And then we're also going to be using the CM stochastic, and we're going to customize it a bit and make it work more in our favors. So I'm going to show you how to plug it in, and then we'll look at longer time frames to see how effective this is. Okay, so to set this up, all you need is your linear regression candle. So you go here, you go to linear. You're going to go to the top one here. You're going to go to by UG or URVU here. You're going to pick that one. And once you have it, you want to hide your regular candles. So once you get here, you can change the candle colors if you want. But just make sure you have your plot line. Sometimes it helps to have it a little bit more thick if you want, but that's personal preference. The next one we're going to be doing is we're going to be going to the CM stochastic. So we'll go here to CM stochastic. And the bottom one there is how it's going to look like by default. The top one is really how you want to get it, how I have it, and everything else on the bottom by the default one is it's just there to really distract you. It did distract me for a while, just having all that there. So what we're going to do is we're going to turn up all the colors here, the green, the stochastic here. You turn that to 100%. You're going to turn down the thickness here. And get your red, which is your bearish. You turn down the thickness, make that go 100%. And then for your blue here is your neutral color. So I like keeping it as white. And what I do is I make this a little more thick, level up thick from what the other ones are. And then everything else you could check off. You don't need it. It's just noise. It'll distract you when you're trading. So get rid of it all, check everything else off, and then you'll be left with kind of what you have here. So that's how you set it up. So if you notice, you have just a line. You have your white, your red, and your greens. So you have your linear regression and your line here. But anyway, the formula is real easy. You want to go to a higher time frame. You can we'll look at this on the day, and then we'll look at it on, we'll go down a little bit. But on the day chart here, we're looking at the S&P 500 right here. And firstly, what you want to do is you want to focus on entering your trade in the white zones. The white zones are basically a cool-off period, and they are the best time to enter the trades. So what you want to do is you want to look at when it's turning white, and that's basically when you would enter. So if before it was red and it's cooling off, it usually means that it's going to usually go from a red and then come to a green. And then if it's green and then you see the white, it's going to go from green, cool off, and then red. But we'll look at a couple examples. But basically, this should tell you exactly when to enter your trades here on the S&P. If you look here where the white zone is, you could enter right here, right where it turns white, and you write it out. And you see it also is crossing the linear line, so you know it's a good trade. You know when to exit because it starts touching the linear line. So right about here. So this is a 20-day, about a 20-day move, and one contract would have gave you about $2,558. So we'll look at a couple of times here. you enter when it's white with the CM stochastic, and you can exit when the candle is touching the linear line. That's basically when you want to exit. So we'll do a couple more times on the day, then we'll go to a couple smaller time frames here. But right here we enter on the white, and we also see it crossing down on the linear line, so we know it's a good trade. And we ride it out till it touches it touches here. You can get out here if you want, or you can get out here. You're still in profit. So this is about a $12 difference in price on the way down. So that's going against the trend. We'll do it 2 more times on the day, then we'll go to another time frame here. So we want to enter on the white, the cool down phase. So we enter here, and it's the perfect time because it is crossing through the linear line as well. You come in here and you wait it out till right up here. This is 14 days, and you basically made probably about $3,311 for one contract. So that's doing it on the day. I recommend doing this on a longer time frame, but let's real quickly go to a 6 hour. We'll do a couple on the 6 hour and then a couple small ones. See, this works on any time frame you want to go. So we see that it turned white. It cooled off right here. It cooled off right about here, and you also see it crossing down on the linear line. So you could have got in here, rode this out for a put, and made profit there. You see the white right about here, and you also see it crossing up on the linear line. You could have rode this entire thing out and be in profit right here. This is a $13 difference in price. You see white right here. This is when you would enter. Right about here. You see it also crossing the linear line. You can ride this whole thing out. And this is a $24 difference in price. This took 13 days. This is about $2,437. So let's go to the hour and see if this works on the hour. Now the smaller you go in the time frames, the more you're going to run into like consolidations and things like that. But it still works the same. Now, me personally with this strategy, I will not go lower than an hour. But I'll check the 15-minute. But right here, for the hour, you got to be a little more quick because we see the white right here. And you can ride this out, and you would be in profit here. Now, this one's a little bit different because you got red right here, white, and red. But if you follow the linear line, you should know that this would have been a fake out. But anyway, you see a white right here. You see crossing down. So if you see it crossing down, you should probably have a good idea that it's going to be going down anyway. So if you rode this out, you would be in profit here. We see white right here. Right about here. And if you come in here, you can ride this out. This took a day, and you would have made about $445. So real quickly, let's look at 15-minute if you want to do more intraday. But if you do intraday, you will, you'll hit more consolidation periods. But we see white right here. We see white right here. If you wrote it out from here all the way down, you would be in profit. This is $325 in one day. You see white right here. You also see it crossing the line. So this would be another day's worth, and you would add like $692. So this works on whatever time frame you want. I just prefer doing this on longer time frames, but you guys can do whatever time frame you want. Real quickly, I want to look at MicroStrategy because we're entering into a parabolic bull run, so this strategy might help with that. So basically, you want to do it the same way. You see white right here. You also see it crossing the linear line. you entered here, you would have rode this entire thing out. If you wanted to do options for MicroStrategy, which it does cost a lot, but this would be a $2,000 move in one day. And it works about the same. So you see white right here. You see cool off right there. You could come in for right about here, which this is very brief. Come in for about 30 minutes or so, and you would make $500 there on the way down. Now keep in mind, as Bitcoin's going up in the parabolic run, that the trend is up. So I would focus on the moments where it's going up. But we see the cool off period right about here, and we ride it up from here to here. This is 20 hours, and you would have made about $2,536 in that move right there. So this is a very powerful strategy on stocks, I think. What you do in this strategy is you set up your linear line, hide your candles, set up your CM stochastic, and have it set up like this. And you focus on all the moments where it turns white. That's your cool off period. And usually, if it was red prior, it's probably going to go green. And if it was green prior, it's probably going to go red. So you can almost predict that what it's going to do. And you want to check. You want to check to see if it's passing, if the candles are passing through the linear line. This is a very, very powerful strategy, in my opinion. So anyway, this is a very simple strategy. You don't need to have your charts filled with stuff. These two indicators alone will help you find enough patterns to be very profitable in the stock market. So for this, you need the linear line regression and the CM stochastic pop on there, and just modify the settings like I have it. But other than that, I'm also going to show you how to use this strategy for the other assets, because I think it's also beneficial for those other assets out there. So I'll be covering that in the next couple of days. But anyway, if you guys like this video, make sure you hit the like button and hit the subscribe button. I'll see you guys in future videos.